So the fund is a $10 million fund. That's our Fund 1. And now we're also starting to look at Fund 2. I think we've already seen about 4 times value growth in the companies. Africa especially, there's a big opportunity, I think, for debt funding or revenue-based funding opportunities. There's about 30% of our portfolio of female founders. How can we not talk about AI and all the impacts of that? So it makes me feel similar to the very early days of blockchain trends.
So hello, welcome to the Network Silicon Valley Club. Today we have our guest, Maria Pienaar, Operation Partner at Unicorn Growth Capital.
Hello, Maxim, and thank you for the opportunity to have a conversation with you.
Could you tell me a bit about yourself and your company?
Well, I'm the operating partner with Unicorn Growth Capital. We're a fairly young fund. We started deploying capital in 2022. So we are predominantly focusing on embedded finance fintech companies in Africa. So these are the companies that help enable financial rails and financial transactions to flow on the continent. Our GP, Barbara Iyahi, she's originally from Nigeria, comes from investment banking background. I come from the mobile industry and have done numerous operating roles in product, in go-to-markets, CIO, different C-level experiences. So, and also if you look at fintech in Africa, there's a strong driver from both mobile and banking, and the funding team really have a deep understanding of the different markets in Africa, as well as the financial services and mobile industry.
How much money is currently under your management?
So the fund is a $10 million fund. That's our Fund 1. And now we're also starting to look at Fund 2. So yeah, we invested Fund 1 in 11 portfolio companies.
How many exits have you had so far?
So far, we haven't had any exits. It's a bit too soon to talk about exit, but all I can say is that our companies, the portfolio is growing really strong. I think we've already seen about 4 times value growth in the companies. They tracking good. It's been tough times, especially last year, but it's very encouraging to see what our portfolio companies are doing in the markets they're operating in Africa.
What future trends do you see coming in venture capital?
Well, there's a couple, and I'll also talk a little bit more about Africa and some of the trends. Now, I think one of the trends that we have seen is obviously for earlier stage funding from accelerators is starting to play a larger role. So I think that's actually quite encouraging to see, because those parts of the ecosystem, I think, is important to help provide quality deal flow for VCs. We're also starting to see more debt funding happening in Africa, especially. There's a big opportunity, I think, for debt funding or revenue-based funding opportunities, especially for different aspects of the entrepreneurial ecosystem, which may or may not qualify for venture capital per se. And then obviously, how can we not talk about AI and all the impacts of that? So it makes me feel similar to the very early days of blockchain trends. But I think from funding deals, that's where we're starting to see quite exciting things happening. The secondary markets is also quite a growth opportunity in the African landscape. And I've seen some of those trends here in the US and global markets as well.
Could you name the latest promising startups you have invested in?
Oh boy, now I'm going to have to choose. Now there's a couple of them that stand out specifically. I mean, we're quite fortunate. About 30% of our portfolio are female founders. So there's 2 specific female founder companies, Bitmama. So they are on-board, off-board of crypto rails, as well as do a lot of cross-border payments. Very strong banking relationships. That's one of our female founders. One of our other female founders have a company called CredRails, which is enabling specific transactional flow within the banking ecosystem with SMEs and enterprises. So that, again, enables faster payments of money's coming in. It's also faster payments of vendors, which that's always where you see a big challenge in cash flow. And then one of the others I think is quite notable is a company called Funbank, which basically takes airtime and turns it into a crypto asset that can be used for other merchant payments and other types of transactions. So very forward-thinking. But yeah, as I say, those are the three that stand out. There's obviously many others in our portfolio.
Maria, where do you source such deals?
Most of our deals came from referrals from other investors or founders themselves.
I'll give you 3 options to evaluate a startup: team, traction, and technology. Which one do you think is more essential?
Early stage where we play, obviously team, I think, weighs the heaviest. So it's important. And then I would say traction. So we invest pre-seed through Series A. Traction obviously is a little bit challenging, especially if they're just starting to generate revenue, but how fast they can build that up. And again, that's where team and experience come into play, and what the opportunity is if they understand that properly. Yeah, and the last is technology, because typically you will find that they pivot their tech stack within the first year, or pivot into different market dynamics as they start getting better traction and growth in the market and understanding their customers better. So the tech for me is the least, as long as they understand how to build tech teams, how to build and manage tech stacks, how to build scalable tech stacks. That will change.
And could you describe yourself in one word?
I would say encourager.
Let's talk about self-development. Who was your mentor in venture capital?
Venture capital, one of the people I really want to call out is Gwen Edwards. She's been very early on part of the Golden Seeds founders, and she's also the head of the chapter for Silicon Valley. Now, Gwen's been in the game for 17 years, especially from a female fund, and she's just been amazing. She does a lot of classes and courses around angel investment as well, and just a wealth of knowledge, and just always so inspirational to work with her.
What top 3 books would you recommend investors to read?
Well, currently, and again, for me, I like to look at more of some of the trends that's coming out. Now, one book I really enjoy is Guy Kawasaki's Remarkable, and what makes people remarkable, because obviously we try and invest in remarkable people with remarkable dreams, and how they bring that into reality. They've done a number of interviews. The other one that I think impacts, especially if you're interested in fintech and even in AI, is Chris Dixon's Read, Write, and Own. And that's defining the next generation. So he talks a lot about the different trends there. So Chris is also from Andreessen Horowitz. And then there's a new book that I had the privilege of reviewing, which I think is also very important. It's called AI Unleashed, from Reddy Malidi from Venture Train Ventures. So he's more talking about how you apply AI within companies that can scale growth, because that for me is going to be more key. Yes, the technology there is interesting, but really how do you bring that in as an embedded part of your organization to really drive the scale everyone claims that it can do? And this is really a breakdown of the how-tos.
And could you share an example of mistakes you made in your investment career?
Oh boy, yeah. I would say one of my mistakes, and that was when I, earlier in my career, I established a corporate VC. And I think part of the mistake was getting too sold up into the idea versus really understanding the dynamics of the team in the company. And I, we all have biases. I'm a technologist. I love technology and trends in technology. But from an investment, it's I think really understanding the biases and finding that balance when you start looking at teams as well. And sometimes you can be a bit overwhelmed by team as well. I know some due diligence meetings I sat in on, there was one particular founder which was quite known in the press, and they were all the red flags. Now, thank heavens we didn't manage to get in on that deal, but yeah, then that founder came into the news again, not for being that great, and other shenanigans happening. So yeah, it's just try and understand the biases and how you're looking at deals, and again, just having a wide enough conversation with regards to the team, the opportunity, looking at the balance. And I think culture is also important. If there's not good cultural fit with the team, that can lead very quickly to risk for the company as well.
How much money should investors expect to lose before becoming experienced?
As little as possible. I wish I had a glass bowl, and I think that's where it's important that when you start deploying the cash to spread that risk as fast as possible. Because of the corporate strategy, we were constrained with the number of investments we could make a year, which means now you really have to bring out that glass bowl to say, okay, this is really my glass bowl magician views make me think that this company is better than others. It limits the choice a little bit more and brings in more risk as well. So yeah, definitely as little as possible. But there will be losses.
What media channels do you use to update yourself about trends in the industry?
So majority of that is still email newsletters that I get with different groups that I've signed up on. I mean, I'm not as active on Twitter as I used to be. Because I just find that that's one social media channel which seemed to have gone quite wacky in its own way. But predominantly newsletters, and then LinkedIn is one of my predominant as well to look at trends, because that's where you still see most of the activities of different things happening there.
What else do you think venture capitalists need to do to be successful investors?
Well, I can talk about some successful examples I've seen, and one of them has been one of the Finnish, when I worked in the Finnish ecosystem, Finnish VCs, where they had crystal clear targets in their investment thesis of what they were investing in, what the profile of the companies were, and they've had, I can recall, about 70-80% success rate on their startups with successful exits eventually. So the key thing is really be clear about your investment thesis, the type of teams you do, and I think also, and this is sometimes a challenging one, is the support you provide to the founders to be successful. Now, in Unicorn Growth Capital's case, we actually do a lot of work and effort to also introduce the companies to the banking partners, the mobile carrier partners, other commercial partners in the industry that can help with deal flow and bring them in contracts, because if their revenues can't grow, then your investment is not going to grow. And it's really being the partner there, helping them with the next round of funding. Obviously, that depends on the founders as well. But as I say, sometimes that's more challenging. Obviously, if you're a lead investor, it's a little bit easier. If you just a smaller investor on the cap table, it's a bit harder. But we always try and be that type of partner to our companies. And it's been proven, if you're looking at angel investments, where the investors spend about 40% of their time with portfolio companies, those companies are successful. So it's really how you help them build that ecosystem. But yeah, it starts with a very clear view on your investment thesis.
Thank you very much for sharing your experience, Maria.
Thank you.
It was Maxim Strelchenko, the founder of the Network Silicon Valley Club, the close community of venture investors. Thank you.
Thank you so much.